Morning, Steve Free in Chicago with the morning grain comments. Prices are unchanged overnight. We continue to be in a tight trading range looking for data. We'll get some energy data today. We'll see what the ethanol margins and production and stocks are. Also the crude oil stocks domestically. But no export numbers, no export sales tomorrow, no commitments to traders tomorrow, and no USDA world supply and demand numbers. So we're kind of in the dark right now, waiting for a resolution in the shutdown, waiting for some kind of deal or no deal between U.S. and China, and any information coming out of South America as far as weather is concerned. The Chinese and the United States will meet at the end of the month. We hope that something positive will come out of the talks. Some feel that a deal would spark a rally in commodities, which is a shot in the arm that we could use here. We did see that one group came out and estimated 2019 U.S. corn acres near 91.5 versus 89.1 last year. We also know that their soybean plantings are 86.2 versus 89.1 last year, and all wheat plantings 47.2 versus 47.8 last year. Still a lot of unknown as far as what the acres are going to be, given the fact that for the most part grain prices are below break even, especially in corn, and they really didn't get the winter wheat planted that they wanted to because of weather. The wild card in the wheat numbers could be spring wheat, where farmers are talking about increasing spring wheat acres over last year. We also note that the spread between U.S. and Russia export prices continue to narrow, and offers some hope that U.S. could get a little bit of export business out of this. But I think right now buyers are scrambling to see where they can buy wheat from the best quality origin. We did see that right now we're looking at South American weather. Brazil conditions may try to stabilize for a while. Some of the dry areas are still not getting rain, but some people think that the drop maybe from 122 soybean crop to 117, 118 might hold for a while here. Argentina still looks like they're going to have better crops than last year. Some people estimate their crop at 56 million tons versus 38 last year in soybeans, and the corn crop near 40 versus 32 last year. So once those beans and corn come to the market, it could offer resistance to our exports. Cold weather in the United States is going to start freezing up the river. And we'll see if that has any logistic issues in moving grain to the Gulf. We did see that one private group came out and said January through December, world corn exports were a record 144 million tons versus 132 last year. U.S. was 69 versus 50, and the biggest buyers were Europe, followed by Mexico, Japan, Iran, and South Korea. So again, I would love to have the shutdown in. Would love to have a deal between U.S. and China trade, and I think all those things would help our trade volume and help us move off this sideways, quiet, low-volume trade. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.